as we not only think about the quarter that we're in, but also look ahead, anything around physical placemaking is an incredibly hot topic. RJ, as we were preparing for this call, we talked a little bit about how we're seeing a difference in how Gen Z is shopping versus millennials versus Gen X and the boomers. And as a result of that, we're seeing physical retail, truly unified commerce, more important this holiday season than it's been in the past. And I think the holiday season also starts earlier, we're seeing some real changes. And so let me turn over to you to tell us a little bit more about Placer before we jump into the meat of it.
Yeah, thanks, Deborah. And I think you're exactly right. And I think, again, thank you everyone for taking time on this busy election day. But I think if we had to kind of sum up the theme of 2024, it really is that consumer behavior is changing across all of retail, both physical and digital. I think there's just so many interesting takeaways on that front. And so obviously we'll dive into that more and more. But I really do think, if nothing else, retailers really have to be aware of some of these behavioral and changes in consumer consumption patterns as well. But before we jump into that, just a quick reminder of what Placer AI is. And if you haven't heard of us, please let us know. We'd be happy to tell you more. But in a nutshell, we are a foot traffic analytics company powered by mobile data. In simpler terms, that means we can come up with foot traffic estimates for any physical place in the United States, whether that's an individual retail store, restaurant, shopping mall, airport, downtown area, effectively anything you can draw a shape around on a map. We can get foot traffic data for. Well, how does it work? We partner with several hundred mobile app companies, and through those app partnerships, we get 24/7 location data on a panel of about 25 million devices, which give or take represents about 8% of the US device population. From that sample, we then extrapolate using the latest in AI and machine learning to come up with a full estimate for whatever place we're analyzing. I like to think of our data as kind of the what. How many people have come to your store, how long they stay there, where they go after. But really what gets interesting is on the next slide is when we partner our data with other data sets, data about demographics and psychographic, and do it in a way that we really keep security and privacy first. What we do is if we know a device goes back to a certain zip code, we know things about that zip code profile, whether it's, household income, ethnicity, generation, things like that, that we can start to make inferences and do it in a way that doesn't infringe on consumer privacy. So a lot of cool features, things like visitor journey, demographics, event, rankings, trade area. And if you haven't seen it, please check us out at Placer AI. Be happy to give you a demo. There's also a lot of free content and a free subscription sign up there as well. So please do check us out. But let's jump into the fun stuff here and let's start talking some of the big picture trends that we're seeing. And I thought just let's set a baseline here and let's look at overall retail, what we're seeing. And I think the slide just kind of tells you the story of 2024, just looking at it. A very up and down year. Starting in January, we had the negative weather. We saw a nice bounce back in February and March. April was a big calendar shift month. So that trend actually looks worse than it really is. We went from 5 weekends a year ago to 4 weekends this year, and the weekend we lost was Easter. So that hasn't happened in like 25 years. So that was a major shift. Started to see a nice recovery May and June. July was another calendar shift month. Then we get into the later months where we see again mixed results. But I do think if you're looking at this, there's two things that really struck me as I kind of thought back to this year. One, we do remain very deal driven as consumers. We are shopping around more places to get the best deal. We are very promotionally driven. We see that across a lot of different categories. But at the same time, consumers are willing to spend for things that they think they're getting perceived value. That they're willing to pay up for events. They're willing to pay up for a new product that maybe hasn't been introduced, or a new product innovation. So things like that. So again, and I think as we kind of look to the holiday season, those themes will remain very deal driven, very value sensitive consumer, but at the same time, one that is willing to pay up for something new. So Deborah, I don't know if that tracks with what you're seeing, but I'm curious to get your take here.
I mean, I think that you hit the nail on the head with some of the calendar. Well, the whole year is like one big calendar challenge.
It's been weird. It's been a very weird year on that front.
Well, I think you take the calendar plus the weather, plus the election, and a port strike, a few hurricanes, you throw all that in, and it's truly unbelievable that we've seen as strong of a year as it's been. And I also do want to make people in the audience aware, for those who aren't, I mean, placer has now turned into a verb. So attending, I'm sure many of you were at ICSC this past May, And it was the first time, not one, not two, but every single company I met with, retail, tech, was, oh, we're going to Placer it. And I was invited by a good friend of mine to kick things off in, kind of a closed door AI roundtable forum. And it started there and it like grew during the conference. And I just want to help people understand, RJ, what does that mean? And then how does that kind of contextualize into some of this choppiness we're seeing within the retail landscape?
Yeah, great. Thank you for that feedback. We love to hear that. I mean, I think it's interesting at this point. Placer works with almost 4,500 customers today. All of them are using our platform in different ways. For a lot of retailers, I would say that they're using us to find new locations. It's been a very interesting year for new retail location openings too. We're finding a lot of times that you're doing better in your own markets, where that market expanding to a new market can be a bit more challenging, just given the familiarity that people have. But site selection is a big thing we do. We do, marketing kind of analysis, ROI on a particular marketing campaign, whether digital or physical, or maybe it's a new product launch, just being understand what happened to your visitor profile. How did that change? Did you take share from other competitors because you did that? Or just even just competitive benchmarking. Generally speaking, most retailers we work with know about their customers, but want to know what their competitors are doing. So we become a pretty nice way to do that. And so really anybody who's affiliated with that retail too. So we work with a lot of commercial real estate companies. We work with a lot of investors behind these chains as well. So it's kind of interesting to see all the different platforms and how that can play out. I mean, again, if you want to stay ahead of these trends, and again, I think you're right. I think a lot of people expect this to be kind of a down year, but at the same time, we really did see a lot of growth. It was mixed. You're right. There was a calendar shift. It seemed like every month this year. But if we look at the kind of the baseline, low single digit growth, I think a lot of people heading into the year would have been surprised by that. So, and then, where we see it in terms of the categories, I think this is kind of one of those slides that kind of there's a few things that jump out from people here too. I think if you would have asked anybody, fitness, this is a category that saw 20% of its locations closed during the pandemic permanently. A lot of that were the smaller boutiques that ended up going out of business. But now we're sitting here that on a year-over-year basis, we're seeing 6% growth in fitness. We are ahead of where we were in terms of pre-pandemic among fitness chains, in terms of visitation trends. So a category that continues to show some strength. I know there have been some issues with individual players in here, but generally speaking, it's a category that I think it's been really positive. And a lot of it's because we are seeing that change in consumer behavior that we talked about at the beginning, that normal attrition that you see with a health club in terms of losing between 15 and 25, even 30% of their membership base in a given year. That changed. We're going to cover that a little bit later, but that's something I just want to be mindful of. Then we see kind of dollar and discount and superstores and grocery. That's where a lot of the gravitation in the food retail sector has been. Consumers seeing deals in this category. Last year was all about kind of finding these deals and then kind of normalizing routine. We're seeing a lot of people go to these stores. It's interesting because, if we had taken this back a couple months, dollar and discount was a lot higher. Superstore was a little bit lower. We've just kind of seen that normalize with the rollbacks that we're seeing at Walmart and Target. We're seeing more promotional activity at grocery. On the other side of it, we do see apparel and home improvement and furnishings down, but we are starting to see some traction for some of these categories that were kind of the pull forward categories in the pandemic, where we saw a lot of demand driving visitation, a lot of people upgrading their homes, their furniture, their consumer electronics for a home office, even sporting goods. Now we're starting to see that replacement cycle for those products that we bought during the pandemic start to kick in. So that's kind of what we're seeing from a overall category standpoint. Anything jump out to you here, Deborah?
If we think about what's happened in fitness, we've also seen some real attrition, unfortunately, of some of these mom and pops. So I think what we're also seeing is, right, people are starting to kind of find their place that's either close to home or meets their needs. So there has been a lot of changes on the landscape. I think the fact that we've seen as many make it through a very challenging time is truly unbelievable. I know you do a lot of work in the restaurant space, which we're not really showing here, but that's also, I think, had a similar, right, kind of contraction and, rebirth as well. I don't know if you want to kind of,
Yeah,
compare.
I mean, it's an interesting time for the restaurant category, and it's one where having the ability to look at both grocery and restaurant at the same time really helps to tell a complete picture. Because what we have seen is that, generally speaking, we're at like flat growth on a visitation standpoint for the limited service restaurants. So that's quick service restaurants and fast casual. We're slightly down for casual dining, but it's also one that we're kind of seeing the themes that we talked about earlier really drive innovation and value. So if I take a look at, kind of the limited service category, but take out Chipotle, Cava, Sweetgreen, the ones that are really doing things with menu innovation, then we're talking about negative for the rest of the category. McDonald's, up until last week with the E. coli issue, had started to see some real traction in the third quarter with its $5 meal deal, the idea of promotion and value, really driving a lot of that. Chili's. If somebody would have told me that Chili's was doing a 14% comp in the third quarter, a year ago, and really lifting and really almost floating the entire casual dining category in terms of visitation trends, I would have said you're crazy. But to their credit, they've done an excellent job, really emphasizing the value that their platform, that their menu offers there too. So I think it's interesting. You're right. We have kind of seen, kind of a down category, but certainly there are some success stories in there as well. I think that can be the same for fitness too. You're right. Some of the boutique and smaller chains are struggling, but at the same time, some of the larger ones where we've seen consolidation are certainly leading the way. So, in another category, frankly, we've seen a lot of change in behavior too. A lot of the, kind of digital ordering, preference that came out during the pandemic has really changed the way restaurant operators are building their restaurants, the way we're going about interacting with restaurants, requiring less space at most restaurants. So it's really changed really about everything in the category there as well.
Yeah, no, I think there's so much innovation that's happening there right now, and yeah, the fact that the restaurants themselves are becoming brands is really interesting. And as you go through that story, RJ, there's also in some ways not quite a winner take all, but those who really focused on messaging and menu. And once again, if we look at specialty retail, there's been a few who really done an amazing job of their menu, if you will, which
Yeah.
is their assortment, their sizing, right? The product that's available in store. Once again, going back to this idea that, right, Gen Z wants to be able to pick it up today, whether it's, buy online, pick up in store, which is also, seen unbelievable growth. But that's another category where we've seen, real change. And going back to grocery and restaurants, if you think about it pre-pandemic, I've always looked at like food at home versus food away from home, right? That food away from home had kind of crossed 50% and hadn't come back until the pandemic. And
Yep.
I think the consumer, right, it goes back to there was just kind of a timing there in terms of getting back to some of those patterns and also real innovation. So I this is always one of my favorite slides. And I think that with lower interest rates and unfortunately some of what we've seen with the impact of the hurricanes and other weather issues, we will see that home improvement and furnishings category also start to lift. Maybe it won't kind of all be in Q4, but I think as we go into 2025, that category will definitely be stronger.
Yeah, I think you're right too. And we'll talk a little bit more about that as we go on. We've got a slide on that. But I do think that we're starting to see some thawing of some of those categories that had been kind of underwater in terms of year-over-year visitation trends the last really 2 years. People had delayed certain projects, maybe that furniture purchase, maybe upgrading that home office, maybe that laptop or computer you bought during the pandemic needs an upgrade. So we are starting to see that. Turning back to the grocery and food category, it is interesting here. What we're showing is visitation share across grocery superstores, dollar and discounts. And it's funny because if you look at the slide on the surface, it doesn't look all that interesting. You're kind of seeing things pretty stagnant, but within each one of these bars, there really are some interesting stories taking place. I think grocery is interesting because it's really held flat in terms of the overall visitation share among kind of your food at home retailers. And really, but though it's kind of still two sides. I mean, we continue to see value grocery. Aldi and Trader Joe's, really in particular, are the two stories in that category that continue to drive a lot of visitation growth at the expense of some of the conventional grocers. Although we are starting to see a bit of a bounce back for groups like Albertsons and others that have kind of gotten a little bit more promotional, a little bit more deal driven. Superstores, it looks like you've seen some loss. It was at 40% in 2019. Now we're down to 38, which for a category like superstores is actually a pretty significant shift. But what you see is the year-over-year numbers are actually flat. And I think what we're starting to see is that we've kind of reached the tipping point in the dollar and discount store. Obviously, there are some issues. We're starting to see closures across a lot of the dollar stores. Perhaps we've kind of reached an oversupply in the dollar store category, and some of the promotional things that we're seeing, the rollbacks from Walmart and Target, are starting to drive visitation trends. So as we look even into the fourth quarter 24, we're starting to see a little bit of reversal of some of those share gains that we've seen for dollar and discount going back to the mass merchants there as well.
I think though the trend in retail media networks and the impact, I mean, it's not often that I'm on an earnings call and all of a sudden I just like freeze. And last quarter when Walmart said, right, this kind of, if you looked at like their EBIT margin growth, right, 50% of it was
Yeah,
advertising, retail media networks, and memberships. I mean, going back 18 months, they didn't have either of those. I mean, yes, was Walmart Connect there? Yes, but was it like the size of my pinky finger? Maybe that's even overstating it. And I think that $3.4 billion number, right, a year ago, I mean, these are numbers that are having real impact. And the reason I bring that up is because they're then able to invest in price. And those retailers like the dollar stores where that's just been a bit more elusive to them.
yep,
I think that it's starting to, as we saw some of these announcements over, let's call it the past 2 quarters with closures at unprecedented levels, this idea of, it goes back to really what you said around, right, grocery and fitness and restaurants is it's innovation.
yep,
And those who are investing in innovation, right, you've got all these alternative revenue sources now, right? And so
yeah.
that's allowing you to then invest in price and innovation in a way that they haven't in the past. And I think that's a really interesting theme of today in general.
It kind of reminds you of the Amazon conference calls circa 6, 7 years ago when you started to see big growth in some of their other business services, whether that be AWS, whether that be advertising, and that subsequently allowed them to invest in other categories, do other things, whether that was fulfillment, whether that was their own private label, other things like that. I totally agree. I think that's been very interesting to kind of see the ones that are doing this innovation are usually having a secondary revenue stream that really helps drive that. And I think you're absolutely right that that has been a big driver of things. Keeping on food retail and food at home, this is actually one of the things that has just been fascinating to me looking at. What we're showing on this slide is the overall number of visits as a category. And I think a lot of people are surprised by how much growth we've seen. The grocery category, pre versus post pandemic, we've seen 11% increase in visits. Some of that is expansion, but actually more of it is just people shopping a wider number of locations than ever have before. Superstores up 6%, gas station C stores up 15%, dollar discount 24. Obviously, that a lot of that is unit growth. It's very interesting. And then you look at kind of the food away from home, QSR up 6, and then full service restaurants down. And so that's to your point earlier about some of the trends we've seen. But I think what we've seen, if I had to sum up the slide in 3 points, one is people shopping a wider number of locations than ever. Two, they're spending less per location or per visit, whether that means fewer units per transaction or just because we're seeing rollbacks across the most of the grocery and superstore category. And then lastly, they're actually spending less time in the store. And so I think that behavior has really kind of changed the mindset and how stores are being developed, retail media strategies, other things like that, given that consumers are just looking for deals everywhere they can find them and spending less time in the store. But there are still ways to get in front of them too. So that's just one of those things that I've just been finding fascinating. Just that people are willing to shop that many different stores to kind of fill out their overall food basket right now.
Well, and what we've heard from many of the C-store operators is kind of real change this year around return to work. And with that, you're on your way, right? You need gas. You tend to, pick up, right, that attachment. But even, we're seeing a lot of the CPGs changing their relationships with C stores. And that I think like that court, I've always been fascinated by that category, but now even more because of some of the changes and going back to the innovation that they're experiencing, especially with what they're seeing in terms of labor availability and labor rates, they're adopting. It's a category I would not have expected to lean so heavy into a lot of kind of the Gen AI innovation, but they really are. And I think, like, to me, that's the one to bet on in terms of seeing outsized returns in 25 as not only this return to office work, but also in terms of how they're connecting to consumers, loyalty programs, et cetera. And that category in and of itself, I think is, poised for an interesting 25.
I agree, and it's one I've talked to a lot of restaurant operators who all of a sudden are kind of envious of their C-store counterparts in terms of both digital innovation, which is surprising. A lot of these restaurant chains have had some sort of digital ordering platform in place for 10, 15 years at this point. Loyalty programs, exactly the same thing. And they see what the C-stores have been able to do and do it so quickly. A lot of them have said they've kind of taken the mantle up in innovation in the kind of more high frequency food space at this point too. So I agree with you too. And on top of that too, generally speaking, and from a value proposition standpoint, there is value perception in this category too. So I think you're right. I think this could be a very interesting category to watch in 2025. It's another category we continue to see consolidation. There's advertising, retail media plays taking place there as well. So I think it's one to be one to keep an eye on, and it continues to be very disruptive here. I promised this earlier. We were going to talk a little bit about and come back to some of those more, pandemic pull forward categories like home improvement, home furnishing, apparel, consumer electronics. And if you look at September, and this has continued somewhat in October, we did start to see a big bounce back in consumer electronics, home improvement, and furnishings. Some of that is just easier compares year over year, but I think there is some of this truth that what you mentioned earlier about declining interest rates and that making some of these bigger ticket projects start to be more affordable. Maybe it's just time, something's broken in your house or something you've been meaning to upgrade. It's just time. Maybe I'm going to actually do that. We don't really see, but we started to see a little bit in terms of housing turnover that's driving a little bit of the home improvement side. But I just think even just kind of the general people are interacting with their homes differently, more wear and tear, things that need to be upgraded just, because of that, more household formation and, millennial, families, things like that are really driving some of this. So I think as we kind of looked at 25, some of these categories are maybe positioned for a nice bounce back.
We've also, you know, we spent a lot of time at Coresight on this intersection of, let's call it the consumerization of healthcare and technology. And what we're seeing in terms of multi-generational living, right? Not only are people seeing, right, unprecedented levels of kids returning from college to move back home, but also, kind of parents, grandparents are moving in. So in many cases, right, we have three generations living together, and a lot of those changes that need to be made in the physical home. So I think as we're seeing this kind of rate of aging that we are, and we're at the early kind of tail of, right, a significant increase, and this idea of trying to age in home, age in place, that what we've seen in many cases, and whether that is, kind of in the drugstores, home improvement, right, this some of this physical change in the home, this kind of it could be defined as medical equipment as well, and in some cases is covered, but that's starting, we're starting to have retailers come to us and ask us how to participate in that. Where does this product fall in the store? Is it more of an online purchase and whatnot? And so I think that going back to how the home is changing in terms of, the use and who lives there, I think that's a really interesting place to watch, especially, depending on what happens with interest rates, but also, kind of along the whole Eastern Seaboard and a lot of the disruption there from a lot of the weather. That I think is going to, continue to have an impact. And, we're going to see, I think, some migration as a result of that as well. So I think it's an area to watch.
Yeah, I think so too. And I think you bring up a couple of really good points there in terms of migration. That continues to be, I think it's not as much as we saw post-pandemic, but we do continue to see movements to different parts of the country. I'd say kind of the upper Midwest, Idaho, Montana area. We continue to see a lot of growth there. The Carolinas are another area that we continue to see growth, although that was pre-hurricane there. So I think that we continue to see that. But I think just broadly speaking, the idea of kind of, aging in place and kind of just overall healthcare, there's a lot of players starting to make bets in this space too. I mean, obviously Best Buy's done a lot of investment behind this. Amazon, talking more and more about it on their conference calls. So I think this is gonna be another category to watch. You're right. I think a lot of players are trying to figure out a way to participate in this category because there are some adjacent categories for each one of the retailers on here to play in the space. So it'll be interesting to see how that shakes out. I do think that'll start to come into focus a bit more in 2025.
No, absolutely. It's definitely a trend to watch.
Yep. So shift gears and talk about a little bit more about 25 and some of the other themes that we're seeing there. Beauty's been an interesting category to watch and something I know you guys at Coresight have done a great job staying in front of here. The 2021, late 21 to 2023 was just a phenomenal period for the beauty category. A lot of changing behavior. I think Ulta and Sephora have done an excellent job changing up their mix to diversify their audience, doing a good job with the store-in-store partnerships with Target and Kohl's respectively, and just a lot of really interesting things taking place. Now we're starting to see a little bit of a reversal from some of the success we've seen for groups like Ulta, starting to see the overall category outpace Ulta. Some of that just, the law of large numbers and the growth that they've had. But we started to see, some of the other players, some of the smaller players in this category start to pick up, or take some of the things that Ulta's done right in terms of product assortment. We're starting to see a shift towards some of the spa and kind of massage categories, Massage Envy and a few groups like that, starting to see some traction on that front. So maybe shifting away from the cosmetic to more the services side of the business here as well. So just another category that as we talk about behavior and changes, how that's impacting overall visitation trends, it's something we're seeing across the board. Now, by no means, I don't think Ulta's in bad shape. I just do think we're starting to see a little bit of change in behavior here. But it's still been a fascinating category to watch the last couple of years.
Well, you've also seen also, right, not only a change in CEO, but a change in many of the C-suite executives,
Yep.
and that, some of who happen to now work at a certain athletic footwear company.
Yep. Yep.
And so I think that, well, I was at an event and I'm like, oh, it's the whole Ulta crew.
Yep.
So
Yep.
I,
Exactly.
I think that, that chain is probably digesting some of that as
I
well.
think you're right. Yep.
I think they have been very much on the leading edge, whether it's loyalty programs, services, thinking about extensions in their product offering. But I do think that there's this digestion that's occurring as well, and you also start to think about the drugstores who are leaning into this category. It is a category that I think, right, there is no size in a great way, and I think that your the age of your customer and the it just keeps extending in terms of age, and also I think is we're seeing a lot of changes in the offering kind of across the whole population. It's just like you have more customers who could potentially shop your store, and I think Ulta's done a great job, if we talk about physicality, right, of store locations,
Yes.
and also their like hyper localization as well. I mean, that's something I continue to be impressed with.
Yeah, that's the thing that's really stood out for me is this hyper localization. What that has done to trade areas, that has definitely expanded their trade area. If I look at who they're pulling in, it's pulling in a wider audience. The visit frequency is up. The profile of that, again, going back to the idea that we're looking at where the zip codes people are coming in from, it's brought in a younger audience, one with a higher lifetime value. It's really fascinating to look. It's actually brought down the overall household income, but largely because it is a younger audience coming in. And so I think you're right that there's a lot of takeaways, a lot of lessons to be learned from Alta that, the things that they're doing right in terms of localization. And it's another trend that I've been keeping an eye on too, because I think it is fascinating. The idea that, if you can really kind of set yourself in unique, and again, the idea that if you're giving something consumers that they cannot get anywhere else, they will shop there. It doesn't need to be necessarily value oriented, but if it's something unique, differentiated that consumers can tell a story about, get out there and be an influencer on that. There are a lot of benefits to that too. So I think that's been, just one of the really more interesting stories in the retail space the last couple of years.
Before we leave it, I think that they've for a where private label tends to be more challenging in this category. I think
It
they've done an
does.
amazing job. But also going back to what we've seen in grocery, because of what people experienced during the pandemic with stockouts, and consumers turn to private label, unlike anything we've ever seen in my
Yeah, agreed.
career in grocery,
Yeah.
and they've stayed, right? That's the thing, is it's been very sticky as well, because, right, price value, quality, and whatnot, and right, the consumers discovered it. So I think that Ulta's done an amazing job of leaning into that. But truly, as a whole, retail, going back to some of these margin driving, kind of it's not even an alternative revenue stream. It's just an additional opportunity that they've leaned into, and a way that they're kind of discussing this product. It's not, the packaging so much better, the messaging so much better, and I think that it's an additional opportunity to drive margins. So whether they use that to invest in price or improve the overall experience, we're just seeing retail in a different, really in a different place in the innovation curve than I
Yep.
think I would have expected. And I think we're seeing that show up in, the physical store, most importantly.
Yeah, I think you're right. I mean, I think it really comes down to ROI for your different store assets in this environment. In a low interest rate environment, there's easier ways to drive it. But as we start to see interest rates go up, the cost of operating a store, whether that's labor scarcity, whether that's just just general operating costs, whether that's utilities, whether that's rent, because that's up in most cases above where we were pre-pandemic. It's all about finding ways to offset that increased cost and drive ROI out of that physical asset. And so you're right, things like services, things like retail media, things like private label. Those are all factors that are playing into this ROI equation. And that you're right, it actually has in a lot of cases changed the actual physical store format. And what we're seeing with this big movement towards smaller format stores, I think a lot of that is because it is more costly to operate physical store with all the things we've just talked about. So we are starting to see groups like the department stores, home furnishing, even restaurants to some extent move to a smaller format store where if I can generate, similar, in a lot of cases, better visits per square foot, but do it in a smaller box, maybe I'm still paying the same amount of rent for a higher traffic location. But generally speaking, these smaller format stores, and again, it's not a cure-all for everybody. It's going to work for some categories. Some categories it may not work that way. But I mean, we're seeing, in department stores, for example, here we're showing Macy's with some of their small format, the visits during the weekday, dwell time, things like that, are changing a little bit of behavior here. But generally speaking, the ones we've looked at for the small format stores have generally been pretty successful in terms of being a way to augment your existing square footage, your existing store footprint. So I think that's going to be an interesting trend to watch in 2025. Is how much more deep do we go into smaller format stores? Are we really starting to see the ROI on these type of formats? How that plays out. So that's going to, I think, another trend to keep an eye on as we look to next year.
Well, especially if we see, with the Saks, Neiman's, however that all kind of plays out, there are malls and, where you either have both locations in the same mall or proximity. And if we go back and learn some lessons from, May Federated, and some malls you had, a furniture and, kind of your traditional Macy's that we know today. But I think that's going to be interesting to see how these retailers rethink some of their existing boxes. And then as a result, how do they bring some of these brands closer to you? So whether it's, kind of strip, open air, whatnot, regionals versus super regionals, how these formats continue to play out, to me, I think the consumer also appreciates specialization. And,
Yep.
and then Macy's Backstage, I mean, that's a whole other story to kind of talk about, and off price in general. But, some of the success of, they've done it. I mean, I feel like, everyone, when you talk about the department stores, they want to talk about something else, right? It's like they get that uncomfortable feeling, they want to talk about any other category. But it truly is unbelievable. I think the amount of innovation and the challenges, right? When you've got an existing fleet, some of these locations that have been there for, quite some time and have gone through a few mergers, I think they've really done an unbelievable job in terms of thinking about innovation. And, I think the small stores is just a great example of that.
Yeah, I think that's exactly the message, is that this is another form of innovation. We've talked about menu innovation and product innovation and things like that. This is another form of innovation. And I think to the idea of localization, specialization, that's what you're innovating around too. Migration has really been the underpinning trend among a lot of different things that we've seen post-pandemic. And now if you can find a pocket of your core audience, but do with a smaller format store that you can better curate that assortment to. We are seeing some really interesting things from a lifetime value, visitor frequency perspective here. I think that's exactly it. I think that this is another form of innovation, and it's one we're going to continue to see. And I think, the floodgates have kind of opened here. I think a lot of groups are realizing, well, we don't always need to do it the same way. We don't always need to have the same planogram. We can do things differently now. It's opened up to a lot more creativity in terms of the actual store format, in terms of experience at that format, in terms of the curation of the assortment there as well. So a lot to come on that front, I think, in the year ahead.
Yeah, and I think it goes back to, if you think about the similarities between a department store and, well, a grocer, right? Grocer, super center, discounter. because of this multi-brand, right, versus your own brand. And we're seeing own brand continue to increase in share at a faster pace in many cases.
Yep.
I think that's also going back to retail media. This is a very difficult, I mean, if you think about the science of those types of retailers, is it's becoming more science than art in many cases now, right? Because the retailers, I mean, I've sat in the back and looked at this with some of these new, right, kind of Gen AI tools, because if you think about this square footage and you put in your own brand versus you put in a, kind of a vendor and you're getting RMN dollars, right? How do you kind of like weigh that? How do you think about turnover
Yep.
per square foot? How does it impact you online and offline? And so I think that the category is becoming more challenging to manage, but at the same time, the opportunity for greater profitability also exists.
I'd agree with you. I think that's a good way to frame it. I agree.
I love this next slide.
Yeah, this has been fun to look at. I mean, for those of us who followed the fitness space for a couple decades, it's been kind of interesting to see this behavior. I mean, as somebody who used to build models for Lifetime Fitness and Club Sports and all the other publicly traded fitness clubs, 15, 20 years ago, it's really interesting to see. You could always almost factor in this, 20 to 30% drop in membership every year. People come in during the New Year's resolution period, they don't find value, or something changes in their lifestyle, ends up churning. And so again, if we look at 17, 18, 19, we did see about kind of 15 to 20% churn for most of the clubs. We saw obviously the pandemic period, the churn really didn't happen in 2021 as we were kind of in the great reopening period. But then we looked at 22 and 23 and 24. What we're seeing is that that curve is kind of smoothed out a bit. We're seeing less attrition, and I think there's a couple of factors behind it. I think first and foremost is there's been a greater adoption of kind of the lower monthly fee type businesses. So groups like Planet Fitness, Blink Fitness, a few others out there. Crunch Fitness is another one that's done a very good job on this. So there's been a greater adoption of that. What that has done with that lower price point is attracted a younger audience who generally has a higher frequency, higher visitation trends for the overall category. It is a difficult category, admittedly, during a kind of softer macro environment, because that is one of the first things people will get rid of. But I do think a lot of these chains are better positioned for macro economic volatility than they were in the past. And so this is another one of those categories as you start to think about, are we just seeing changes in because of a pull forward in demand during the pandemic, or we are actually really seeing structural changes in this category? And I think fitness is kind of the perfect example where we have seen some real structural changes in terms of business models, in terms of customer base, in terms of where they're putting their locations, that has really led to structural changes in the overall category.
I mean, I remember pre-pandemic spending an unbelievable amount of time on thinking about and analyzing how the kind of enclosed malls for the most part were changing how they thought about fitness. It wasn't just the mall walkers anymore, right? We
Yeah.
started to see kind of fitness chains locating in malls. And I always thought this whole idea of mixed use, live, work, play, what are we seeing, like where do you think we are in this kind of journey, and what's the destination?
Yeah, it's a great point. And actually, if we turn to the next slide, that's a perfect segue in terms of looking at where we are in terms of the mall. And I think this has been one of the more interesting things that's really become apparent really the last, let's say, 12 to 18 months, is that those that have gone to more of a mixed use strategy, and I think we've seen a lot of that at the open air centers, are the ones that are seeing kind of the visit outperformance right now. There's a lot of change in the way consumers are interacting with the different malls that have gone to mixed use, whether that be, there's more residential, there's more co-working, there's more placemaking options at these places, more experiential, whether that's fitness clubs, whether that's, entertainment type concepts that are out there. This mixed use thing, this whole strategy that we're seeing some real tangible results. And if we look, with our partners that have kind of embraced this mixed use strategy, we see visitation trends for their tenants ahead of those, comparable the peers, the same stores for that brand in that area. So it's been really interesting to see kind of that, and just the way that the whole mall itself has changed. And again, the idea that the mall is dead, I think is completely completely wrong. I think that there's so much more taking place, and there's a lot of excitement taking place, especially as a lot of these malls become kind of central to the communities they're in. Kind of tying it back to some of the earlier things, we're seeing some of the localization, the specialization of the stores taking place in these malls too. Again, really kind of changing the makeup of who's coming in there too. So, kind of where we are, I think we're still making a lot of progress in mixed use, but I think a lot of chains that were a little bit, or a lot of operators that were slow to embrace mixed use, were really starting to come around and seeing the benefits. And you and I talked about it before too. Just the term mixed use is starting to become mainstream, and I think that's just so fascinating too, that it's becoming, people understand or at least on paper, kind of understand how these malls are changing, and how the purpose of a mall is not just shopping. It's become a lot more experiential, a lot more community focused at this point.
It's so funny you bring that up because I was with somebody the other day who's not in our industry and used the term mixed use. And it was one of those things that I was like, how do you define that? Because I'm like, is this just something that they read? And they're like, it's when kind of you have retail and kind of apartments and potentially a place to work. And I'm like, yeah, it's exactly what it is. I'm like, and they said, they've just started to think more about, right, their own situation and how do you kind of improve. I think there's this idea almost about improving the efficiency of your life, right? How can you get more done in the hours that you have? And that I think is causing people to really rethink, right, their visits, which I think this whole kind of conversation really illustrated. And then like where they shop and what the purpose of that visit is and how many more things can they get done. So I would say my prediction for 25 is that we're going to see, we're already starting to talk to many landlords about this. We're on the early stages of seeing much more healthcare in malls.
Yep.
I mean, anything from like MRIs to, I mean, and oh, this is my favorite, is that you can literally, right, we all, well, not all, but many of us do doctor's visits now on our phone or on our laptop or whatnot. But there are literally in some malls, and they're seeing very high usage rates where you go into, a private, right, you shut the door and you're talking to a doctor on a screen in the mall.
Yeah.
And so, but maybe, right, if you think about it, I've thought about this a lot because I was on this call the other day and someone brought that up, and then I looked at the data. And maybe it's that, if you're at home, there's potentially other people there, right? You want to have a private conversation. And so that I thought was an interesting, but going back to the things that you've never heard before. And this is something that, some of these folks believe will be pretty significant in the go forward. But definitely to me, healthcare as a whole is going to change the way that our malls look. And I think 25 is really the beginning of kind of that demarcation line that
Yeah.
we'll start to notice it, right, when we go into the stores.
Yeah, I think you're right. I mean, we're very early days. I mean, we're just starting to see it. Most of the major mall operators we work with have maybe towed the water a little bit. Maybe they have one primary healthcare facility at their locations now. But you're right. I think it'll become a lot more noticeable. And there may be some other catalysts that kind of start to drive more adoption at the mall. But I think we're starting to see, for any number of reasons, I think the privacy factors initially one, I hadn't considered that, but I think there's a lot of factors that are starting to open up people's eyes to maybe that this is a viable option in terms of primary healthcare. And I think you're right, as we kind of see greater adoption and greater engagement with these new malls, and in a lot of cases, the malls themselves being branded and being marketed as a brand themselves, there could be a big opportunity for that category. So I think that is another one. I think that last couple of years, I mean, I think there's been a lot of talk about healthcare retail, but I think maybe 25 is starting to be, kind of maybe the inflection point for that category.
I've heard from some providers that because the consumer isn't right, there can be anxiety and whatnot about going to the doctor. But if you're going to the mall and the doctor just happens to be there, that in your mind, so they see kind of like fewer cancellations. There's a lot of data behind better outcomes, if you will, when the
Yeah.
consumer is in the mall. And and that goes back to one other point that I'm starting to hear that I haven't heard in 2 decades is this idea of drugstores moving back to the mall. And so the idea that you can fill your prescription if you're seeing a doctor in the mall as well. And that goes back to, I mean, these have all been conversations in the last 6 months, RJ, that
Yeah.
are, I mean, I've never had. So
Yeah.
there is definitely a change, and maybe it's 25 that we start to see that demarcation, at least of the conversations being had, and maybe it changes more physically in 26. But I'd say next 12 to 18 months, I'd expect some, I mean, some pretty significant change that it's noticeable to many of us.
Yeah, I think you're right too. And that the drugstore part of that's a very interesting part of that discussion. It's one we're starting to hear a little bit more of the whispers on that front is exploring different real estate. There's obviously been a lot of announcements about store closures, but as both CVS and Walgreens, with leadership changes are starting to explore new alternatives there. I think that could be a really interesting story is where the store is going forward. What does the store of the future look like for those guys? And I think there might be some interplay here with the malls here. So
Well, and one of the challenges that the drugstores face obviously is around staffing.
yes,
And as more and more of the landlords, mall operators are talking about this idea of almost kind of, retail as a service
yep,
and having, kind of fractional, employees available
yeah,
for the retailers. So this goes back to, this is a whole change in, I mean, this is like why this category, like why real estate as a whole is just,
yeah.
it's unbelievable how, when you think about something that is so, right, takes so many years to build, how much innovation and how much change we're seeing in such a short period of time. But this idea that, you have the mall as a platform, retail as a service, whatever we want to call it,
Yeah, exactly.
how the landlords are starting to think differently about their relationship to the tenant.
Yep.
And that, I think, is, I think I started here first in outlet, and that's kind of then drifted into some of the, more traditional, if you will, open air strip and certainly enclosed malls.
Yeah, I think that I've started to hear that more and more too, and I think you're right. This whole rethinking and thinking outside the box in terms of how to best operate, malls, as we kind of see the shift to mixed use and other strategies. Yeah, I think that's exactly right. So. Anyways, moving on just to kind of it's obviously third quarter, fourth quarter. We got to talk holiday. That's, our contractual obligation for these things here. So, and I mentioned in the beginning, we are seeing obviously a value-driven consumer, but one that does spend for holidays. And so, we kind of see the year-over-year trends for some of these earlier holidays, whether it be Mother's Day, Memorial Day, Labor Day. We see big boosts in a lot of cases back to about pretty far ahead of where we were both year over year and pre-pandemic. There is this element that people are continuing to shop around holidays. It's the shoulder periods where the weakness is taking place, but a lot more excitement, a lot more visitation trends around these holidays that I think sets the tone as we look kind of to the year-end holidays here too. I think that again we'll continue to see this excitement around holidays. People maybe just waiting for the right moment on these things, and continue to see right around the holidays too. So I think we're going to see a big push right ahead of Christmas this year as well. But I think it's been interesting to kind of look this evolution of the event and the holiday is really a motivating factor. It always has been, obviously, in retail, but it feels even more pronounced in today's environment than ever before.
Well, and I think it's interesting. I actually posted something on LinkedIn, is what we're seeing, like whether it's Diwali or Double 11 coming to the US, this idea that we're celebrating not only the holidays that have been more traditionally celebrated, but we're also celebrating new holidays in a bigger way, right? All of New York City schools were off for Diwali this year. And, and also for the first year for Chinese Lunar New Year. I mean, we're seeing some real change. And I think that it's not only cultural awareness, but there's also such a huge desire, I think, to celebrate. And that's bringing community together, that's bringing family and friends, and also in some ways giving people a permission in some ways to take a day off. And I think there's a lot wrapped around that, and a lot of that also involves, I mean, we've posted pictures around, we saw Halloween in July, right?
Yep.
we saw
Yep.
we saw like holiday, is defined as like the winter holidays as early as September this year. And to me, right, when you see that before Halloween is pulled, right, we're starting to see some real differences in trends. And I think because oh my gosh, I had this amazing conversation the other day with someone around some of our favorite like holiday treats. I happen to be very big at, people who know me, anything around like marshmallow and chocolate together. And so we literally, it was such a great conversation because we talked about every single holiday and what we liked that was marshmallow and chocolate for that holiday. And then because it's available so much more, how much more that we're buying. And you start, like, I stepped away from that, and not only was it a super fun conversation, but I was like, there it says something about how we're literally shopping for our favorite kind of treat, holiday to holiday to holiday, and thinking about that much differently than we ever have before. And I think that's because, holiday just means so much more to people. And so I know we're about to wrap. There are a few questions that came in, RJ, that I want to make sure we get asked. So,
Yeah.
number one, yeah, go ahead.
I just want to follow up. Your point about the changing holiday mix is certainly on. That's why I actually have been saying instead of just holiday event, I mean, a holiday could be a Taylor Swift concert in this case. It could be something else like that. It's very different. And so, as you're thinking about it from a retailer perspective, there's a lot of things that non-traditional holidays that are really motivating factors for consumers here. But anyway, shifting gears just before you answer questions, because there's some good ones already in the mix. Just in terms of holiday outlook, I would say that generally speaking, we think it's going to be a very positive, holiday. Again, we've shown that consumers are willing to spend. I think retailers are arming themselves with a lot of, great promotions that are going to be coming up. This, willingness to get together with the community and kind of be together with families, I think is going to continue to be a driving factor. And so I think if we're looking ahead to 24, I think we're going to see a lot of, continued visitation trends. I think superstores will continue to be a winner. I think we're seeing some of those categories like home furnishing, particularly housewares, consumer electronics, certain categories within there continue to do very well. So that's my quick take on the holiday here for 24.
Well, and it was interesting. You bring up this idea around community, and not to tie it back to C stores, but why not? Is is we have heard that this idea around community coming together in C stores, because they're so right, their trade area is so localized, it's around like 3 kilometers.
Yep.
That is also what's changing in that, kind of sector of retail. And that, I think, is also a very, one of the areas where we're seeing just kind of structural change take place. I think it's very interesting. I think the idea around community and, these events becoming, holidays themselves, I think it's a great example. All right. So some of the questions while we still have time, and thanks everyone for sticking with us. What are some of the indicators in 2024 of the bigger changes to come in retail in 2025?
I think that's a great question to start. I mean, I think we talked about a lot of the behavioral things that we saw throughout the year. We spent a lot of time talking about that, whether that's changes at food retail, whether that's changes at beauty, whether that's changes at the mall itself. I think that, one of the things, I mean, I guess nothing else we're seeing is that consumer behavior can change pretty quickly in this environment, and retailers have to respond to it. I think that we found, honestly, through some of the brands and things that have done a great job with social media and influencer, that can have a pretty quick and immediate impact on overall visitation trends, whether that's to the store for that brand or the brand or the stores that brand sells through. So I think that, kind of the indicators that we're seeing is that behavior seems to change every year. I think the idea of normal years, quote unquote, is kind of a thing of the past. There's certainly going to be a lot of changes and things that drive changes in consumer behavior in 25. But I think if nothing else, I mean, it just shows that consumers have to be agile, that this behavior thing can change year in, year out. And so I think that's kind of my answer on that.
Yeah, I think that makes a lot of sense. And, the I've always looked at, gas prices have been key, employment, inflation, housing turnover, right? Just kind of this whole,
Sure. Yep.
as we think about leading indicators, those are so, and certainly, if we think about, kind of, how whatever proxy used to measure consumer confidence as well, those kind of taken in aggregate, you can usually get a pretty good understanding for at least like the next quarter of where the consumer's head is at. And, as we think about, most of those are trending in the right direction. And so everything is kind of set up for a fairly strong 25. And I think what's important about that, I think the consumer is going to spend this holiday like 25
Yes,
economically is going to be stronger than 24. Election years are always a challenge.
they are.
There's a distraction. I will say, going back to some of the data, I was surprised that September was as strong as it was, but it seems that, as, some things are much more compressed in some ways. that a lot of the noise, I felt like it was almost like we had port strike, hurricane, election, right? All that noise was like that was at my October. I mean, it was like,
Yeah.
and so it's not, I will say, despite all that, I think October has been better than I would have expected.
Yeah.
September, since it was kind of all this news was late, like September ended up outperforming, I think, many of our expectations. And that gave a lot of retailers confidence for holidays. So you think about when they were placing, orders for holiday, right? They had early indications they were getting back into business. And so I think we're going to see, adequate inventory levels for Q4 as
Yep.
well, which is
Yep.
also, of course, really important. All right. Another question. What kinds of marketing and merchandising create hope in consumers, specifically the have-nots who feel run down and not nearly as holly jolly as the haves? Interesting question. Thank
Yeah, that's actually an interesting question. Um, yeah, it really is something of a bifurcation across a lot of retail categories where the ones that have done a good job and maybe struck a chord with consumers with particular innovation, it seems like that they continue to drive that visit frequency, and that is true to a lot of extent. But at the same time, too, I mean, it's no reason to not innovate. If you're a down and out chain, there are still some things that you can use. Some of the topics that we talked about in terms of just innovation. And what I've seen is really it's consumers are really looking for something different, something unique. So brand partnerships are a way to kind of drive that. Maybe it's a collaboration with an influencer that can be very successful. Maybe it's the store and store type things that we're seeing drive new product innovation at a lot of the stores as well. So I think it's okay to think outside the box here. Innovation can come in a lot of forms. We talked about menu, product, store format. People are looking for excitement. They want an excuse to go to your retail location. And so even if the things, are kind of down and out, don't use it as an excuse not to innovate. There are still a lot of reasons, and that is what driving the one underlying factor more than anything else, even more than value, I'd say, is kind of uniqueness and innovation that's really driving visitation trends. And so if you can find a way to do that, and there are a lot of creative ways to do that, I think that's the answer there. Is that there are still ways to make your business more holly for the holidays here.
Well, as we come to the top of the hour, which RJ, we probably could talk for three.
Yeah, we
Um,
could.
and if we do like James Cook in the mix, we'd be here.
Yeah,
We talked
exactly. We
about,
could get the whole crew together here.
yeah,
So
we actually have talked about doing a marathon podcast for charity. So maybe we should all put our heads
hey,
together
we
and
should. I think so. Yeah.
do something great for the holidays. So as we have ICSC in New York just around the corner, any predictions for what might come out of that?
That's a good question. I think a lot of themes we touched on are going to be a big part of that discussion. I think, kind of the evolution of the mall will continue to be a big part of that, and kind of the success stories of mixed use, the new tenants and the way tenants are changing up their formats, and, the idea of healthcare retail. I think a lot of that, we'll be talking about some of that at Place to Discover right around the same time as ICSC as well. So if you're interested, please look us up. And that event will be December 10th. So we've got a lot of good things there as well. But I think a lot of the themes we talked about are going to be major areas for discussion topics at ICSC this year as well.
Yeah, I agree with you. Thanks so much, RJ, for joining us. Yes, we look forward to joining Placer Discover. That's the day before ICSC. So that second week of December, which once again, all the dates are changing since Thanksgiving's so late. So I think that's the 10th, and the 11th and 12th is ICSC. On top of at Javits, interestingly, the AI Summit. So that is going to be a week of learning. And I think it's great that Placer's kicking us off. So thanks, RJ, as always. I always learn from taking the time not only to dig into the data, because I think we all have the data, but then to extrapolate those insights from
Yep.
them. I think that's what can be challenging. And you know I spent a lot of time obviously in European and Canadian retail and real estate, and when we see how different in some ways the US is, to me, there's so much opportunity ahead and so much innovation. So looking forward to learning more with you at that in just a few weeks in December 10th and beyond. So thank you so much for joining us,
Thank you. Pleasure as always. Thank you, Deborah.
and see you soon. Take care. Thanks everyone for joining us today.